Today's topic, we're going to cover backtesting strategies, which is probably by far the most important topic I probably think I can ever cover. And I don't think there is any other topic that's as important as this one or as interesting as this one in the whole technical analysis. So let's start it, right? So this is a plain chart, and let's just assume that we're looking at Tesla for this example, and let's say we remove all the studies. We don't have any studies here. So you guys, let's say you guys are watching some YouTube video or some recorded session, and you guys believe that this golden cross, 50 moving average crossing 200, or maybe 20 moving average crossing 50 moving average, or let's just say there is this Bollinger Bands that where it crosses the upper standard deviation. You can buy and you can sell, right? So you hear a lot of indicators, and then many videos and a lot of content out there, right? And at times it's really hard for us to basically pick and choose which indicator is good, right? So every week we give a session, and like every week it will be a different indicator. So the goal is not for us to apply all the indicators and make the chart very clumsy. The goal is, like, we explain all the indicators, and the end user on the other side, they should be able to pick one or two indicators, and they should be able to apply them on their day-to-day trading or swing trading or long-term investing, right? So indicators are like, there are many indicators. Over a period of time, most of them may be successful. Some of them may not be successful. And the indicator may work in one market condition. It may not work in a different market condition. So how do we know out of all these 100 indicators, which one is good and which one will work in most market conditions, right? So the only way for us to know or understand which indicator will work and which indicator will not work is simply by backtesting. So how do we do backtesting, and how do we do backtesting on multiple time frames and multiple chart times, right? So we will look at it in this session, and I'm not going to explain any indicators in this session. I'm going to basically look at how to backtest any indicator, right? And then we're going to take maybe like one or two examples to see how we can backtest those. And it's basically up to you guys on how to utilize the indicators and how to use the backtesting feature on Thinksabio to basically understand if the indicator is really working or is it simply like nonsense, right? So let's start with the simple moving average, right? So let's just say you are on 360-day 4-hour chart, or let's start with 180-day 4-hour chart. This is default. Everyone will have this by default on Thinksabio, right? So I'm on a 180-day 4-hour chart. And then the next thing I have to go is I'll go to edit studies, and then I will simply add exponential moving average. I will add two of them. Okay. So one of them is 20 exponential moving average, and then I will label it as the color will be white, and then the other one will be a simple 50-day moving average, and the color will be, let's just say, red. Okay. Okay. So most people will say, like, if 20 moving average crosses the 50 moving average, that is probably one of the best moving average crossover. And then every time a 20 moving average crosses a 50-day moving average, which is a red, 20 is white, 50 is red, right? So every time a 20-day moving average crosses a 50-day moving average, people will say just start buying. And then the exit is probably like the same, right? The 20-day moving average crossing the 50-day moving average, or some people will have a percentage like 100%, 200, 300%, whatever it is, right? Or they have some kind of stop loss, right? So basically, let's just say you hear like 20 moving average crossing 50 moving average is by far the best crossover out there, right? So you plot it on the chart here. Everything looks cool, everything looks great. And then you will basically write this strategy on your paper, and you'll say like, okay, so every time a 20 moving average crosses a 50, I will buy. And every time a 20 moving average crosses down the 50 moving average, I will do a short sell or I will buy puts, right? And then where do you cover? You can basically cover it, by percentage, or basically you can cover when the 20 moving average again crosses above 50, right? So this is a strategy that you will hear on YouTube videos or books or anywhere, right? So in order to backtest this, right? So I'm going to remove all the studies, right? I'm going to click on studies. Then I'll go to edit studies here. And then here is where we will add the indicators, right? Like the moving averages or Bollinger Bands or RSI or like CSI, dollar volume, whatever you guys have, whatever you guys use on day-to-day basis, we add these in the studies. But right next to studies, there is a thing called strategies. This right here is where you will backtest. This is where you will basically use to backtest the indicators that you find in studies. So you have to go to studies, edit studies, and then you have to go to strategies right here. So there are many indicators here, just like how you have the indicators under studies. You'll have many indicators under strategies. So you can basically look, we will pick one, the one that we are looking at, right? Moving average, 2-line strat. Strat stands for strategy. Strat is a shortcut for strategy, right? So you will select that. And then you click on this gear icon just to make sure everything is right. So the fast moving average is 20. Slow moving average is 50. The average type is exponential moving average, right? And then here are the orders, right? So if you look at this, it will clearly, the name itself, the order name will tell you what kind of order it is. So this is basically a moving average, 2 lines, meaning there are like 2 moving averages. Strat stands for strategy. LE stands for long entry. LE at the end of the strategy, LE stands for long entry. SE stands for short entry, meaning whenever a 20 moving average crosses the 50 moving average towards the upside, there will be a long entry. And then whenever there is a 20 moving average going below the 50 moving average, it will close the long entry and it will open a short entry. Okay, so this is the basic strategy that we have by default. Okay, so I didn't select any of the other studies. I'm having a simple basic chart, 180 days, 4 hours, and then I selected a 20-day moving average crossing 50-day moving average, and it is an exponential moving average. If I click apply, what it will basically show you is where are your entries and exits in the last 180 days, right? So if you zoom here, it will basically show you like at this candle, you have the 20 moving average crossing the 50 moving average. As soon as this candle is closed, you will have a long entry here. You'll have a long entry here. Now, again, you will have a short entry here and immediately a long entry here because it just went down and then it came up, right? So again, you have a long entry because the right next candle, it went down and it came up, right? So you will basically have a long entry going all the way from this candle, which is 676, and then it will go all the way up to this candle, short entry here. Here because it crossed down, right? And then you have a long entry again here, and then you have a short entry. So this is basically, I don't think it's basically doing a long exit here. So what we have to do is, if we don't have an exit here, so what we can do is we can have a stop loss for long exit. So we will add a stop loss for long exit, and then we will add a stop loss for short exit, right? So we can either define a percentage or we can either define a value here, right? It's up to you. And then you apply it. So when you take a short entry position here, and then if the trade goes against you by 0.75%, it will basically exit the position, right? So you can also have your stop loss mechanisms here, and then you can define the percentage. Let's say like 0.75 is too low. So you can basically say, okay, I will give some room for 2%, and then I will let it basically run for 2%. So if you look at that here, because you defined a 2%, instead of your short entry exiting right at the next candle, you took a bigger loss from here all the way to here because you took a 2%. So you can also have a trailing stop loss if you want. For example, you go to strategies and you can give a trailing stop loss for long and short. Remember, LE stands for long entry, LX stands for long exit, SE stands for long entry, short entry, and then SX stands for short exit, right? So these are the things that you have to remember when you are trying to do a backtesting. So you have a moving average long entry, short entry, and then you have a trailing stop loss, long exit and short exit, right? So if you apply this, then you will understand where you are actually entering and where you're exiting. Well, it all looks good, right? But how do you really know if you are basically being profitable or basically if you're looking at a loss, right? So you'll go to edit studies, and then under studies, you will add an indicator that's called floating PL. You'll basically add it, hit apply, and then you'll hit OK. So basically what it shows is, if you really apply this strategy in real time, what is the profit and loss that you're looking at in the last 180 days, right? Because the time frame is 180 days and you're using 4-hour candlesticks to do a long or short, right? So, and then here it's showing 100. That means by default, the backtesting feature or the strategy testing is basically going to show you, it's going to buy and sell 100 stocks, right? So it's going to take 100 stocks as default. It's going to show you the profit loss curve, assuming that you're buying 100 stocks, right? So let's just say you buy and you have a trailing stop, and then you basically have a trailing stop at 1%, for example, and then you basically short Tesla every time there is a moving crossover, 20 crossing 50 to the downside. And then this is your profit and loss curve going to look like. You're going to end with net minus $3,992 over a period of 180 days, right? So let's just say, let me take some other example. So, okay, so this is, yeah, this is the same. This is pretty much the same. Instead of, I want to show you guys from beginning. Okay. So let's just say you have a 20 moving average crossing 50, and then you are net negative, right? So you think like, okay, so maybe 20 crossing 50 is not a good, moving average crossover. You will change it from 34 crossing 50. Instead of 20 crossing 50, you will basically have 34 crossing 50, okay? And then let's just see, and then I'll have a fixed stop loss of 0.75% here, okay? Stop loss add. For long and short, I've added stop loss as 0.75%. Okay, so this is a 34 EMA crossing 50 EMA on a 4-hour candlestick on 180 days, and then you have a stop loss of. So over a period of last 180 days, if you are trading Tesla with 100 stocks, you would be net positive $5,250. Now let's change it, for example, from 34 back to 20. Look, see, the thing is that a simple minor change will show a drastic difference in the profit and loss curve. See, if I do a same strategy using 20 moving average crossing 50, my profit and loss at the end of 180 days is minus 6,385, right? Now, if I basically change the 20 from 20 to 34, everything just flips. It went from minus 6,000 to plus 5,000. See, following a strategy and following it like by heart is like really important. Like no matter what the market condition is, no matter what the news is, no matter what happens, for example, right? If you simply follow some indicators, for example, you can easily hit your price targets. Now, let's just say this is all good, right? This is all good. It's looking good on 180 days. But what if I change it from 180 days to 360 days? So if I'm using the same strategy the last 360 days, where I will simply follow a moving average crossover, 34 exponential moving crossing 50 exponential moving average on a 4-hour chart in the last 360 days, my net positive is 27,136. Now, there could also be a downside, but then there is probably 1,000 some change showing as downside. You have a simple stop loss here. You have a simple stop loss, and then your stop loss is 0.75% of your position. When it touches that means that you're out of the trade, right? We don't have to do anything. We like the strategy backtesting, it will do everything. All you have to do is go to studies, hit edit studies, select the strategy that you want to do. Like you would have heard hundreds and hundreds of indicators, right? Bollinger Band, Dawn chain, ER trend, what is it? First hour breakout. Like if the first hour candlestick is the second candlestick on the first hour is breaking the first hour candlestick, and then 4-day breakout. I mean, gap reversal. You have I don't know, maybe about 100 strategies here. I did not test all of these, to be honest. Maybe I did some of these. I created some of them on my own based on my expertise. But you can basically add all these strategies and have a stop loss, change the stop loss percentage. Okay, so let's just say I change it from 0.75 to 2. Okay, so let's see if that's gonna give any difference to my end profit loss, right? Okay, not much. So it's gonna be about $1,000, but the downside went from $1,000 to $3,000 because I'm giving more room for the stop loss to kick in, right? So I believe 0.75 is good, but I want to test with 0.5%, right? I'm just giving you guys an overview. I'm not gonna go and tell all the strategies that we're gonna do here, right? I'm not gonna test all the strategies. We don't have time. I'm just trying to explain you how to backtest, right? So I changed it from 0.75 to 0.5, and then my net result on the same chart, same time frame, has changed from 26,000 to the upside to 5,000 max on the upside. Now the downside went from, I think, about 1,800 something to 2,300, right? So that way I know, like, okay, so 0.5% is not good. So 0.75 probably, which is a default, is a good stop loss for me, right? So you'll have this, which is good. Your profit and loss curve looks absolutely terrific, right? I mean, look at here, like the loss is like 829. It's not even 1,800. $829 at the worst case. And the upside is 27,000. What is the risk to reward ratio here? This is huge risk to reward. Like, this is like terrific risk to reward. What did I do? Nothing. I simply plotted a 34 exponential moving average crossing 50 exponential moving average on a 4-hour chart. And I used a stop loss of 0.75%, right? And then, well, it looks good, right? Will this strategy apply for all the tickers? Let's give it an example. Let's give it a try, right? So let's see SPY. Okay. So if we apply the same strategy on SPY, your major drawdown is like minus 1,500, and then your like probably the last profit loss you see is like 1,500. It's about the same. It's 1:1. It's 1:1. And let's take some other example, right? So let's take some other name, TDD, for example. So if we take TDD in the last 360 days, we would have probably made 2,708, right? Now let's take a step back. What would the results look like if I change it from 4-hour to 1 hour in the last 20 days? The last 20 days, if I would have traded with 1-hour chart using the same 34 crossing 50, my net loss is, I probably have lost at like $49, right? But what if I bump it up from 20 days to 90 days? It's $319. What if I do the same over 180 days on 1-hour candle? It's $433. So this strategy is basically working on a 4-hour chart, because if I go to 4-hour chart, it's actually net positive. See, we are having the same timeline. Let's say I'll take 180-day 4-hour. So 180-day 4-hour is probably low, right? So let's see if I have a 360-day 1-hour here. If not, I will just add it. So customize list, add time frame. So 360 days, 1 hour. I'm adding that. So now I have a 360-day 4-hour. I have a 360-day 1 hour. So if I have a 360-day 1 hour, it's actually net positive, like 2,652. So on a 3-hour, on a 4-hour candlestick, it's 2,700. So no matter what, I think if I use a 4-hour candle or if I use a 1-hour candlestick, over a period of time, over 360 days, I'm actually showing as net positive on TTD. For example, let's do the same on Tesla using 1-hour chart. This is 360 days 1-hour chart. Same 34 exponential moving average crossing 50. So if I use a 360-day 1-hour chart, my loss is 20,764. But if I use the same time frame, 360 days, but instead of 1-hour candle, if I use 4-hour candle, is a complete flip. See, my net positive is to 27,136. Just by changing the time frame, you're going from minus 20,000 to plus 27,000 just by using 4 hours instead of 1 hour, right? So let's just say if I'm using it on 90 days, like 5 minutes. If you use the same strategy, like 34 moving average crossing 50 moving average on a 5-minute time frame over the last 90 days, you'd have made 39,000 on Tesla if you are buying and selling 100 stocks, which most of us wouldn't do, but I'm just saying, right? So if you're basically using this, you can basically make 39,000. Now, if I make it, let's just say, okay, so it all looks good on 90 days, but what if I want to do it on, let's see, 180 days? So on 90-day 5-minute chart, it's saying like I'll be positive by 39,000, right? But what does it look like on 180 day? It's still showing I'll be positive by 37,000. So we know that on a 5-minute chart, if we are using a 34 exponential moving average crossing 50 with a stop loss of 0.75%, we will be net positive irrespective of what time frame we look at. Now, ideally, like Thinksabio, I don't think it does allow to add a time frame beyond 180 days for less than an hour. But then we have to backtest this like for like 10 years, which is not possible on Thinksabio. But then at least we can go and backtest up to like 2 years. So if we want to backtest it like beyond 2 years, for example, there is another tool called TradeStation, which we can use to backtest, which we are not going to cover in this session, by the way. But I just want to give you guys a perspective. The most important thing in the whole trading is probably backtesting. You will realize that, like, let's just say someone will say like, oh, okay, so if a price crosses VWAP or anchored VWAP or Bollinger Band, buy it. And then you see like he will say like on YouTube or like on Twitter, he'll say like, that's how I made millions. Come to Thinksabio, do a backtest. Do a backtest. And that's how you know if a strategy is really, really working or if it's not working, right? And then, for example, right, you think like, okay, so you don't want to do a crossover, for example. You want to tweak it a little, right? So you want to tweak it. So you don't want a crossover, but then you want it like anytime 20 or 34 is above 50, it will show here 20 because the code is hard coded for 20. So anytime 34 crosses is above 50, then you want to take a long position, right? But then under strategies, you may not have one that you like. So what you can do is you can copy this code, for example, because it's a, I think TD Ameritrade copyrighted code. You cannot edit it here, but you can go to strategies and then click create, and then you can just paste the whole code, and then instead of crosses above, you can say is greater than, and the fast MA is less than. Simple example. I'm just showing a simple code, right? So whenever a fast MA is 20 here, right? And then the slow MA is 50, for example. Whenever fast MA is greater than, not crosses above, greater than, right? There is a difference. So you will say it as Thinksabio test 1, for example. And then you hit OK, and then you'll remove this, and then you want it to be 34. Look, I did the same, I used the same moving averages. I used the same time frame. I used the same stop loss. All I did was, instead of buying and selling when there is a crossover, I said, if you do a buy, and then, for example, if you do a buy here, but then if you have to exit here, for example, even if you take a loss here, that's fine. But as long as the trend is high, you keep buying it, right? So instead of crossover, what I did was I changed it from cross above and cross below to is greater than and is less than. That means if 34 is above 50, don't bother about this code here. It will be 20 and 50, but it's not 20 and 50. It's a hard coded code, but for you guys to take that confusion away from your mind, I'll just change the code itself. So 3450, right? When 34 is greater than 50, no matter what time frame it is, you just buy it, right? You just buy 100 stocks. See, it made a huge difference. I think it went from, I think about 30,000 to 50,000 in the last 180 days on a 5-minute candlestick. If you guys are using an intraday, this is how you can trade, right? Let's just say it's working for Tesla, right? Is it working for SPY? Let's see. Let's put it for test. You can actually make $3,000 on SPY if you're doing, let's see how it will work on Apple. Okay, you are not making much on Apple, so you're making 366, but the drawdown is huge. The drawdown is like $900 on a 5-minute candlestick. Now, what if you change it from 5-minute to 4-hour on Apple? You have some serious drawdowns. Well, you have some good trends as well if you can log the profits, but then you also have some serious drawdowns on Apple. So let's use the same on Tesla here. For example, you have some serious drawdowns. The same strategy, I changed it from 180-day 5-minute to 360-day 4 hours. This strategy is working on 5 minutes, but it's not working on the 4 hours. Let's see if it will work on 1 hour. 360 days, 1 hour. It's working okay. It's okay. It's like 17,000. Not bad. Well, it's working on Tesla. Is it working on SPY? Nope, it's not working on SPY. So every stock will have its own character. What do I mean by a character? Every stock will have its own ADR value. It has a range. Every stock will have its own volatility. Every stock will have its own cult following. Every stock will have its own volume, right? So just because a strategy is working on SPY doesn't mean it is working on Tesla. Just because it's working on, for example, let's see Apple on 1-hour chart. Just because it's working on Apple 1-hour chart, it doesn't mean it's working on Apple 4-hour chart. Same strategy. I didn't change anything. I'm just changing time frames. Look, this is mainly to give you guys a perspective of how we think like there is like a golden bullet or there is like a holy grail indicator. There is no such thing as a holy grail indicator. There is absolutely no such thing. A same indicator like I have shown you can work on one time frame, on one ticker, and then it may absolutely not work for the same ticker on a different chart. If I go to 5 minutes, this may work. May work. But you also have to look at the serious drawdowns here, right? So you have to look at the drawdowns. And let's take something else. Upstart, for example, which is probably like, so look at this. Moving average crossover, 34 crossing 50. The same thing on 5-minute chart in the last 180 days. You would probably be looking at 15,000 profit as of today. But what about if I go back? Are there any serious drawdowns? Yeah, sure. Here. See, you would be looking at 5,000. Why? There is a earnings, and then there is a big gap down, and that's it. You just lost money here, or maybe you made money here. There is a chop here actually, and then there's a lot of chop here. Like, you know, it's going up, down, up, down, up, down, up, down, up, down, and then during this chop, you have actually lost like 5,000. And let's see, this 5,000, 2,000 some change here. So there are drawdowns. It's not like there are no drawdowns. There are drawdowns. So you have to look for serious drawdowns as well. Like, okay, so I have like, 15,000 profit that's showing as of today, good. But if I go back, are there any serious drawdowns here? See, am I ready to take 5,000 loss on Upstart, right? So we have to understand which stock will actually work for which indicator and under which time frame And do you really have to adjust the time frame? Do you have to adjust the indicator? Do you have to adjust the stock? I mean, there is a lot. There is really a lot. What I'm saying is every week we will come here and we will look at the indicators, and then we will feel like, okay, I got it. I'm good. I can make money. Well, actually, there is a problem. The problem is when you do a back test, it shows otherwise, right? I mean, you can use any indicator. I mean, I can just remove this one, and then I can go to strategies, and I can just go Bollinger Band long entry. On the same ticker, on the same time frame, if I'm using a Bollinger Band entry, I'm actually on a net loss. So not only it is important to pick a right indicator, you have to understand which indicator will work on which stock, under which time frame, and then you'll have to do a back test. And then Thinksabio will give you like a decent time frame. If you are not doing like if you do like a daily chart, I think it will give you like good few years, like maybe like 10, 20 years to go back and test. But then if you're using like a 4-hour or anything under like daily chart, you'll only have like maybe 360 days, I believe. So go to this, I'll remove Bollinger Bands long entry. Let's just say, what else do we have? I don't know. I mean, you have profit targets. You can give like a profit target. For example, let's see, right? So you can take profit as an end, which is hitting like 0.75%. You can lock profits. RSI, right? So many people like RSI, right? So let's put RSI to a test. Cool. So if you basically use RSI, whenever it hits like low, you will buy. Whenever it hits top, you will sell. You will actually be net negative. So all the RSI fans who are using the RSI mechanism on UPST, I'm sorry, but your indicator is not working on UPST, but maybe it will work on SPY. It's not. It's actually net minus 11,000, right? So whoever is believing like RSI is the holy grail, back test it, right? And then let's see if there is anything most of you guys will use. So let's say momentum long entry. I don't even know what is this momentum long entry, but simply I'll just plot it on SPY on 180-day 5-minute. And then you will say like, okay, so it's not bad, right? So let's look at the drawdowns here. There is only one drawdown, like for $500, not bad. So let's see if this momentum thing will work on Tesla. It's working cool. So let's see what are the drawdowns here. Absolutely no drawdowns, right? On a 5-minute chart. Let's see if it works on, let's say, 4-hour. It's good. It's okay. There are not many serious drawdowns here, but then the profit and loss is also like at 11,000. I think when we looked at the other moving average, I believe our profit and loss curve was about 27,000 or something, right? So on 4-hour chart, it's not so good. Let's see if on a 1-hour chart. See, the same chart, same momentum indicator. If I'm using it on 4-hour chart over a period of 360 days, it's 11,000. But on 1-hour chart, same time frame, same chart, same indicator, 36,000. And let's look if we have any serious drawdowns. Not much, 3,000. And then what's the risk to reward? 3,000 versus 36,000. I mean, that's incredible. At a peak, using this simple momentum stuff, we can one would have made like 73,000 something. So, I mean, there are many indicators. So then we can come back to the code and see like, okay, so what is this actual momentum indicator doing, right? And that way you can understand what is the actual mechanism of this momentum long entry, right? So let's see, we only have momentum long entry, right? So if you really understand the code here, we can simply inverse it and we can make it as a short entry as well, right? And that way we can basically test, okay, it looks good on the long entry momentum, but what if it's like, can I actually capture the short entry momentum as well, right? So the same stop loss of 0.75%. So this is pretty much how we backtest, right? So I mean, I personally have some backtesting, like I have some like proprietary, like we are working on some proprietary indicators, right? Like to use. And then, for example, let's look at on Tesla, right? For example, this is on 360-day 4-hour chart, right? So we have about 89,000 profit, and then a loss is about 7,000. That's a terrific risk to reward. So we are using, like, for example, we want to use it on SPY. We have a 6,000 profit, but then you also have like 1,000, not bad. It's like 1:6, or maybe like 1:4 or 1:5, something like that. Let's look, right? So let's look at this, for example, Apple, you have a drawdown of 1,800, but then you have a high of 7,000, not bad, 1:4. See, look, like, it's like we will have to take losses. There is no holy grail. We will have to take losses. But then the loss versus profit, the risk, the downside here versus the reward, all we can do is find out a mechanism where the risk and the reward is like at least 1:3 or 1:4, or even it could be 1:2, as long as you win more than you lose, right? And then the strategy should basically work for like at least 50 to 60% of the tickers, right? For example, you look at MP, for example, right? It's working, this strategy that I'm displaying here, I cannot show the details, but then it's working on a stock like a market index like a SPY. It's working on Apple, for example. Let's see Microsoft. I didn't backtest it in a while for Microsoft. So this is probably not working for Microsoft. We still have a one-to-one risk reward, but I don't like one-to-one risk reward per se, right? So we can look at Amazon, for example. Let's see what Amazon is showing, right? So Amazon, no, it's choppy, right? It's not working on Amazon. And then we can look at something like Visa, for example. Let's see Visa. How is it looking on Visa? Nope, not looking good. And we can look at something else like TTD, something else that we look at, right? So it's working good on TTD. So all we need to look at is like we need to have at least 50% of the stickers that should reflect a good, risk to reward ratio. I mean, if we use this on TTD, for example, look at the risk, right? Like the risk is like $267, and the reward is like 8,000. I mean, what's the risk is to reward there? That's huge. So when we are learning all this stuff, like all the indicators, it's important to backtest everything, right? So it's really, really important to backtest. And I mean, we can basically like pick one more here under strategies and see. So if there is a gap down, there will be a short entry. And then if there is a gap up, there will be a long entry here, for example, right? And then you have this cost. So if you apply that, what is it going to show? Like how are we going to play the gaps, right? Like many people will say, oh, there is a gap, right? Like there's a gap we need to buy, there is a gap we need to buy. But then if you really buy a gap, how is your profit and loss curve going to look like if you have a fixed stop loss here, right? And this is how it's going to look like. You're going to make like, I think $903 on a stock like TTD. And if you look and pick Amazon, for example, you're going to make like 50,000, but then you also have a serious drawdown, like 52,000. Not a good strategy to use on Amazon, right? So you have an Apple, you're net positive today, but then you also have a serious drawdown here, right? What if I use it on, let's just say 4-hour chart, right? Not good, still not good. So what if I do it on a daily chart, right? So not good. So maybe not good for this stock, but what if you use it on Tesla? Not bad, but then you still have a serious drawdown here. Though risk to reward is like slightly okay, but we have better, ways to make money on this, right? So let's say we want to use it on daily chart, but then you want to test it for like 20 years, right? And let's say 20 years. If you use a gap up, gap down on Tesla for the last 20 years on a daily chart, you would probably be on 40,000, right? So let's see if we use it on SPY the last 20 years, right? You'll be a profit by 7,000, right? So if you use it on Apple, for example, right, you'll be like in the last 20 years, you would have made like 6,000. So let's just say you removed a stop loss. You removed a complete stop loss. All you will do is you'll simply buy or sell. There's no stop loss, right? Then you will probably be 8,000 on Apple on 20 years on a daily chart, right? So this is just to give you some perspective, like how can you backtest any strategy that you have with a stop loss, right? And there is an indicator called Halloween, it seems. I don't even know what it does, but all I know is I need a stop loss, right? Some random Halloween indicator is giving me $1,000 on Apple over the last 20 years, right? So let's check it on, right? I mean, I don't even know this Halloween indicator existed, right? But then if you use it on some stocks, for example, right, you can simply see, someone will say like, hey, have you heard about this indicator called Halloween? I mean, it is super cool. And you'll be like, oh, okay, so the name looks good. It should be really good, right? But then you back test it, you will realize like it's not so good, right? It may work, right? Like, look, I mean, you will still make money on some unknown indicator. It's not like that, but you will have to look at the potential of the indicator as well, right? So for example, if I just replace this Halloween with some other unknown indicator, I don't know this indicator actually, momentum, for example, right? So if you use it on 20-year daily chart, you would have made, someone would have made like 84,000 simply by using this momentum indicator. I don't know, maybe it would have bought somewhere here, somewhere here. This is where it would have bought. This is where the momentum started. It never sold it. So this momentum indicator would have bought on 2013. And then from 2013, there is no sell button at all for Tesla, right? So I have this pie, right? So when is the last time it would have sold, right? So it would have sold in 2000. The last entry was at 2009 on SPY, right? And then it would have, there is no sell button from there. So this is how, in short, you guys can do a back testing on Thinkorswim. And all you have to do is go to studies, edit studies, go to strategies, and then you can basically select any strategy you want, or you can write your own strategy, click create, and you can start your own strategy here. If you want the code, like a template, you can just click here. You can copy the code, copy it, create, and then you can remove what's there, and then you can just paste it, and then you can edit whatever you want, right? Like you don't want Bollinger Band, 3, or you don't want to trade on close, you want to trade on open, for example. You can change it here, right? And then don't forget to add floating P&L here. That's how you know if the strategy is actually giving returns or it's actually a dummy strategy, right? Like many people create indicators. I mean, I create many indicators, right? But then so let's just say Thinksabio. So this right here, for example, we go back to 5 minutes, right? 5 minutes here. So this right here, this indicator, I don't know if anyone here is using this KGF indicator. So that basically uses this like a 34 crossing 50 on 5 minutes. So after back testing on many stocks, on many time frames with many EMAs, that's how KGF evolved. The KGF Lite, by the way. Actually, KGF, the original KGF is like it's even better. It's even better. But then many people are complaining like, oh, there is no entry if I'm using KGF for like a 2 days or 3 days. I cannot enter any trade. They want to really trade every single day. So after having many people reached out to me, I created a KGF Lite, right? So just showing you how I create indicators is I just don't dummy create some dummy indicator and then just release it. So we backtest it on many stocks on different time frames, and then we release it to the group. If someone want to use it, they can use it, right? If someone really want to test something, right? Don't just blindly take, even if it is me or anyone, right? Like just don't blindly take any indicator. Just take it and then test it. There is like volume profile, the volume profile thing that I explained some time back. I have created a strategy for that, a trend following, and playground. All the playgrounds are the ones that I'm that we are working for Thinksabio here as a proprietary testing. And there are many you can create. If you guys need any help, you can reach out to us in the group, and if someone can create and backtest it, cool, they can test it for you, right? So backtesting itself is a big thing, so you need to pay attention. So we have last 10 minutes. I'll be open for questions. I'll be looking at the questions to see. Oh, by the way, if you guys want to just, if you don't want to add this floating P&L, you can just right-click and show report, and Thinksabio will basically give you like exact time and minute when it is opening the order and closing it. So I'll show it again. So you have to right-click here, and then click on show report. So it will give you a report of which exact time and minute it's placing an order and which time and minute it's selling it, right? So it'll also give you the P&L and total P&L, max P&L, and total orders is like 204. That means like the last 180 days, you would have had 204. So that's like pretty good active trading, right? Like it's giving more than one entry or exit per day. So that's a pretty cool stuff there. I mean, you guys have to backtest it. I mean, like there is no way that I can test like every single thing out there, right? So you guys have to test it, and then you have to see, is it working on 5 minutes, right? On a 5 days, it may look like, oh, you're actually taking a huge loss, right? But then on the same 5 minutes, if you go to like, we should have a 20-day 5 minute. Okay, so on 20 days, you're at, but then over a period of time, if you look at it over a period of 180 days, 5 minutes, it's actually net positive here, right? If you just started this like last 1 week, you would have been in a loss, but then if you're doing it from last 180 days, you'll be in profit, right? That's pretty much it. You can just right click show report. It will show you all the entries and exits and time, like exact minute and the profit loss here. And then it will also show you how many entries. It's like 527 in 180 days. That's a lot of entries and exits, right? You can also change it from, if you don't want like, you want to look at like 1 minute chart, you can also do it on 1 minute chart, same 34 crossing 50, or you can, have some other time frame. Like let's change it 72, 89. Not a bad moving average either. So that's also good. I'm simply typing those because I know like those moving averages are good, right? So you guys have to really backtest. So Apple, not bad. So you can do it for day trade. You can do it for like anything, right? So, all right. So let's see. I have a couple of questions here, not many. Let's see, and this will change between. Yeah, so the profit and loss will change between. So if I'm selecting 1 minute, the moving average here is gonna be for 1 minute, right? If you select like a 1 hour chart, the moving average is gonna be like a 1 hour moving average. If I go to, let's say 4 hours, the moving average it's gonna pick is gonna be like 4 hours. Same, like you can also do it for weekly. If someone cannot actively do a day trading, they can, if there is an investor, for example, right, or like he'll be like, I cannot buy and sell every day, right? So you can basically have something like this. And you can have a weekly, you can have, you can have like a monthly as well. Let me find the monthly stuff. You can even have monthly. Let's just say, let's put the monthly on SPY, for example, right? So yeah, if we are just trading monthly, I think it's 3 years monthly chart, we will still be in profit, right? I mean, there are many ways to make money in this market. I think we basically focus on unnecessary things, and then we kind of ignore the important thing is like, how do I backtest what we have, right? And yeah. So Kalyan, yeah, you're right. So it's a combination of indicators with the time frame, and also the stock itself is also important, because as the volatility changes, it's basically the results are going to change, right? I'm only taking Tesla and Apple, Amazon, like the big names as an example. I mean, there are 100 other names. Roblox may not even show properly. Maybe it did like 1,000, right? Let me see. I can make this right. So PLTR, right? For example, yeah, you'll be making like $79 profit over a period of 3 years, right? So not a good thing, right? So same PLTR, if you use it on a 4-hour chart, you can actually make money. The drawdowns are very light, like they're like $200 drawdown, but then the profit is like $1,000. It's 1:5. So I mean, you can use it on any stock, right? Like I have a few other, let's say DKNG, right? You're in profit like 3,400, but then you also have a drawdown of 1,600, 1:2 maybe. So not something that I would look at, right? So NVDA, right? People love NVDA. So you have a drawdown of like 1,600, but then you also have a upside of 18,000. Let's look this on the one that I'm working on, right? Like the 2,000. So you can, if you don't want like, you think like, okay, I don't want to short anything. I just want to be a long guy. So you can just disable this. I just went here and then I clicked here. I just disabled this short entry, right? It's just long. So if you're just going long on NVIDIA, whenever like 34 crosses 50, there are like 0 drawdowns. There's 0 loss from last 360 days. You will always be in profit if you do that. And you can see that for PLTR. You're probably in loss now by like $29. Your max loss is 160, and then your max profit is 2,800. Roblox, right? So let's see Roblox. You're in loss, so it's not working on Roblox. So you have to mix and match the indicators with stocks and then time frame, and then Microsoft. This is working wonderful for Microsoft, but not for other names, right? So you have to understand. Okay, so do we have a for loop that I can apply with? Well, we can, Kalyan, we can do like multiple time frame. For that, you'll have to use a multi-time frame. Actually, Kalyan, to your question, this right here, I'm using a multi-time frame. And I have like few others where I use multi-time frame, for example, right? So I use multi-time frame. And yeah, so I use multi-time frame. So my entries and exits are different times. Yes, we can use multiple time frames. Yes. Can I test the same for options? Unfortunately, no. I'm actually, well, there is not on Thinksabio. There is a thing called Quantopia where you can test it for options as well. But that's like way complex. Like it's kind of beyond like my brain at this point, but I eventually want to be able to backtest options as well. And then options will give you a completely different results than this. Bear that in mind. If you're an options trader, you may get completely different results than this. But we don't have a way to test the options, unfortunately, on Thinksabio. Can you apply this on Ripster EMA Cloud file? Yeah, this is actually Ripster Cloud. This is actually Ripster Cloud. Ripster is, Ripster Cloud actually, he actually took the name, but the cloud is like there from like way before, like 34, 50. This is Ripster Cloud. And then if you want another, like 512, you will have to add, you have to append the code here. You have to add one more moving average, like 512, and you have to use that moving average for exit. Yes, we can use it. I actually backtested all the Ripster clouds. And that's why I basically use 5 and 12 and 3450. So Raghuveer, yeah, we can use it. Same strategy for 100 different stocks. Manually seems very difficult to be changing the parameters. And unfortunately, like it's like difficult. It takes a lot of time to basically backtest. So it is what it is. Like it's unfortunate that it takes time to backtest all of these on Thinkorswim, but then at least we can get started. Like on TradeStation per se, we can have like bigger time frames, and then Quantopia, we can actually add like a bunch of stocks, and then we can basically backtest all of them with one single strategy to see like the average returns, right? Like one stock may go down, one stock may go up, right? So, but then at least you guys can get started, like just not blindly buying and like listening to someone like, oh, this indicator is good, right? Like test it on, like, if there are 5 stocks that you're looking at, just test it on those 5 stocks, right? And then you will, that's easy, right? Like you have like maybe 5, 6 time frames, you have 5, 6 stocks, just test it on that and then see how the results look like. It will actually separate the belief from reality. So that's important. That's about it, guys.